In yesterday's video, I said we needed to look at the S&P 500, especially the futures throughout the day. What we saw in yesterday's price action, the S&P 500 did come down and retest that 64.30 mark and then bounce like a Super Ball. This put incredible momentum into risk on. This is what we were actually hoping for inside the markets, and the stack probability was there that could have occurred. Please let me know in the comments, how did you go in yesterday's session? I also mentioned that it was really important to keep your eyes on the S&P 500 futures, the NASDAQ futures, the Russell 2000 futures, and the Dow futures. We saw a lot of constructive action inside the futures, and they've remained constructive up to the current time of the recording of this video. Make sure you keep your eyes on these today. Always be aware that there's always up and down price action inside every single chart. Now, what does that mean? Typically it means when people see red, they think the bulls are killed. If you know what song that comes out of, what CTKS song, please drop the title of that song into the comments, and you are awesome. We're seeing a slight push up in US liquidity. Basically, when US liquidity comes into the market, it comes in to support weak markets. And a lot of people are doing a lot of cheering for Bitcoin at the moment because it pumped up. But you can see it's not really that much. The issue is that we do remain in a downtrend at the current time. Please bear that in mind. We'll be looking at the key levels you need to keep your eye on coming up later in the video. It's vitally important to have the right mindset, and if you go into YouTube, whack that in and put CTKS method and do your search, you'll come up with this new channel. Just go to playlist, there's no videos there, go to playlist and listen to these tracks. They will get your mindset correct. They literally have 40 plus years of trading and investing wisdom inside them. And thank you to everybody who's reached out and said these songs are really helping them out. That's beautiful. Turning to Bitcoin and looking at the longs and looking at the shorts and also looking at the S&P 500 futures overlay, you can see the S&P 500 gives a fairly good directional bias for what the crypto market will be doing. Unlike pretty much every other channel, we know what pushes the markets around. And it does change. It's not just only the S&P 500 futures. All markets work as an ecosystem. Now, what are we seeing here currently? The shorts are just getting their lunch money taken from all of the longs. So basically the shorts have lost a lot of momentum inside the market, but that could be set to turn around. One of the things that you just got to bear in mind, when it goes too positive for too long, it's going to flip backwards. Just like when it goes too negative for too long, it will flip backwards as well. The markets are quite positive, and the longs have the tailwind behind them to justify higher prices until the S&P 500 hits resistance. Unlike other channels, we're not guessing, we know where that resistance is. Popping into Bitcoin, so we can see that Bitcoin has staged a really good bounce back, and we know exactly why that's the case. Of course, it's not about the S&P 500 at all, it's about the VIX. It's also about the DXY, the US 10, the US 2. If you know what I mean and you know what I'm talking about, put in the comments, I know what you're talking about. Now, we know from Bitcoin that we're coming into a level of overhead structural resistance at that 112.60 mark. There's a higher one up at 112.617. Now, when you look at the CTKS method, we mark up all of price history. These are not random lines that we draw on the screen. They're two levels of standard certification. When you get clustered, that means that they're stronger. And also, thicker means stronger, lighter means weaker. Now, why are there so many lines on this chart? Well, the reason is that we chase 1 to 2% per day. So you must have those lines that guide that kind of decision making. If the lines are too fanned out, you just won't be able to do that. So that's why this level of enhanced markup is really important to you. Also, when you see a gap inside the market, that is a positive CTKS gap because it's come up from upward price, but it can turn into a negative CTKS gap when it hits resistance. We've seen this occur just previously, not too long ago, realistically. Knowing where those gaps are is worth a fortune. We had nearly $1 billion worth of liquidations in the past 24 hours yesterday, but now it's dropped down to 345. The ETH shorts got absolutely whacked and the Bitcoin longs got whacked as well. The shorts and the longs are always whacking each other. And somebody got whacked to the tune of $27.11 million. Ow. In news today, there's a lot of stir-up with President Trump firing a Fed board member. And that board member, she's not going to go quietly. And not surprisingly, the probability of a rate cut jumped from 83.7% yesterday to 90.4% today. One thing to understand before we look at the cheat sheet is this particular article. If President Trump just makes sure that the Fed does what he wants it to do, that's actually going to drive rates up. Now, when the 10-year and the 2-year come up, that puts negative pressure on the stock market and, of course, on the crypto market, but it does make the DXY stronger and the euro weaker. Technically, an action like this may have the opposite consequence of what the president is hoping for. And just looking at the headlines, we can see the Dow Jones came up, the S&P 500, the Nasdaq, the Russell came up, and also the 10-year. And interestingly, the VIX came down. I'm going to explain why that happened as well. Something just to put on your calendar, Nvidia earnings report is tomorrow. As far as economic data releases go, Jackson Hole is in the hole. And we can see that there's been new home sales. They've been really positive. Core durable goods orders also positive. Durable goods orders better than anticipated. The Richmond Manufacturing Index also better than anticipated. And consumer confidence from the conference board also better than anticipated, better than forecast. We've got prelim GDP quarter-on-quarter unemployment claims and the prelim GDP price index quarter-on-quarter coming out. It could be quite interesting on Friday for the core PCE price index. Something to just keep your eye on, and it's expected to be 0.3%. With the CTKS method, we can go long at spot in uptrending markets and also downtrending markets and also consolidating markets and make money. Why? Because we know where the support and resistance levels are in advance. Because we know where support and resistance levels are, we need to go down and understand how all the markets move as one. And the best way that you can do that is to grab the cheat sheet. This is your guide to mastering price action. Just scroll down from the homepage at ctksmethod.org and pick it up absolutely free. How does the cheat sheet actually work? It works by understanding how all of the different charts all relate to each other. For example, we've got row 1 and row 2. These are the risk on and risk off signals. Row 3 is the major market indexes. Row 4 supports row 3. Row 5, 6 and 7 are the crypto market, and row 6 and 7 support and are influenced by row 5. Also, there's a connection between row 5 and row 3, something to just bear in mind. Looking into row 1, which is the VIX, the DXY, dollar yen, the 10, the 2, and oil, we saw that the VIX initially spiked up and then it did nothing but retrace, going through the entire session. I'll explain why that was the case. We also saw the DXY just bled out in that session. The 10-year bled out because there is incredible amounts of overhead structural resistance around this area, and if you've got the indicators from the service, you know that. And the 2-year also bled out. Now, one of the problems that President Trump will face, and he faced it previously with Jerome Powell. He went head to head with Jerome and the markets got a little bit wobbly. The rates actually increased. Now, why did they increase? And they're coming down at the current time, mainly because the VIX is coming down and the DXY is coming down. Now, why could they go up here? And why is Bloomberg talking about the fact that rates could increase? Well, Bloomberg is not a positive proponent of the president. That's without question. But that's not actually the point. What they're saying is quite fair. If other countries look at US debt, US Treasury debt as being politically motivated, they'll want a bigger return from their investment. That will push the interest rates up. In other words, if it's riskier, it will mean they need more return. And that's the driving force. And that's something that could throw a lot of people out. And of course, one thing to just bear in mind, when rates come down like this, it makes money cheaper. When money is cheaper, the big hedge funds, the big institutions, literally with hundreds of billions of dollars, trillions of dollars, can just grab money, overnight repo it, and basically throw it into the markets. It really matters to them. Therefore, they tend to take advantage of these things and rotate out of bonds into riskier asset classes, something else that you might like to keep on your radar. Looking into row 2, which are junk bonds, the Eurodollar, the Aussie dollar, gold, silver, and copper, we saw that the yields were, junk bond yields were going higher. Gold also got over that overhead structural resistance, turned it into support, and it's off to the races. Silver is a little bit weaker. Now, this is pointing to geopolitical instability, and this is a sign that we need to keep our eye on in terms of the crypto market. Basically, silver is a fairly reasonable predictor of momentum inside the crypto market. You don't want to just use silver, you must stack probabilities, but it's something to watch out for. We also saw that we got a kick up in the Eurodollar and also the Aussie dollar. Copper also did quite well. Popping across to row 3, which is the S&P 500, the Dow, the Nasdaq, and the Russell. What we saw, and what we were talking about in yesterday's video, we had a really good degree of underpinning structural support around that 64.30, and that was tapped and it bounced like a Super Ball. Please note that we have upward overhead structural resistance around that 64.90 mark. That's going to be the next most important thing to look at. And if you've got the structural indicators marked up through level 1 and level 2 standard certification, you can just overlay your charts. That's exactly the way to do it. So we can see, judging by all of these chart patterns, that we've got a degree of positive momentum coming back into the market. Fantastic. Checking out row 4, we can see Apple, Microsoft, Tesla, Nvidia, and also Strategy. In the past 24 hours, we've seen Apple go for it, and also Tesla go for it. Tesla was really quite strong in the previous session and that followed through. That's always a really good thing to keep your eye on Tesla. Tesla's also quite good. Nvidia doing well. Microsoft not doing well at all. And when we look at strategy is just marrying up risk on from the stock market and risk on from Bitcoin. Row 5 is how things start to get pulled together. We're looking at total crypto market cap, Bitcoin, and Ethereum. When we look at total crypto market cap, we've got some constructive price action at the current time. We'll have a look at the structural levels in a minute. One of the things we also know with Bitcoin, it is grinding through that structure. And it did have that positive CTKS gap. Remember how I was saying positive can turn into negative? What I'm speaking about specifically is this 112.60 level. That positive gap is turning a little bit negative at the current time. This is exactly what we would anticipate. That's the purpose of this. This is where the structural algorithms are going to step in and push price down. This is where they seek to push price down until price gets above it and then proves itself as support it will move to the higher levels. A lot of people just don't understand. If you do small percentages and you roll them over, you can make way more than what people can do if they hold. This is hidden institutional knowledge. The institutions do it all the time. Therefore, knowing where structure is vitally important. You can try and guess. You can do recent indicative price and say, oh, price came down to here, so that's support. Well, did you know the support was there when price was there? The answer has to be no, because price didn't print. Now, what we do is something completely different. Through 2 levels of standard certification, we already know where the structure is inside the market. We look to the right. All of those levels look to the right. For example, we already knew that Bitcoin was coming up against overhead structural resistance. Let's have a look at ETH. Now, how is ETH going? It's done pretty much the same kind of movement as Bitcoin has done. But what is it looking like from a structural perspective? That's why we need to pop on the indicator. We can see, well, certainly up here, let me just view that a little bit. Around that 47.29, there's a lot of structure. It's coming up into its own structural resistance at 46.20. There's a whack of structural support at 45.28. This is what you want to do with your structural indicators. You just want to overlay your charts. From a retail perspective, everybody's an expert at buying, especially when it goes diamond hand territory. But when it goes parabolically up, people are not so good at selling. And they can typically hold into 80% plus retracement, so you must learn how to sell. Let's have a look at how Pepe is going. Pepe is a custom indicator. You can get any chart marked up with level 1 and level 2 standard certification and the indicator created. Let's have a look here. So what we're actually seeing is that around that 1040, we're starting to get into a lot of overhead structural resistance on Pepe. We do have some pretty nice underpinning structural support at that 994 level and below. Of course, we read structure from the right, and that is a really important skill to create in yourself, because we already know where the algorithms are going to buy and sell. We need to assess momentum and direction of the market. That's what the cheat sheet is for. Now, what about if we look at total crypto market cap? Here we're trying to understand where is the structure and how strong is it. You can see as prices come up like this. Now, why am I pointing to other charts? Because total will help us to understand where other charts will find structure as well. All charts are intercorrelated. So we can see as all of this price momentum, I'll just change this to this, as all of this price momentum came through here, what did we see around this area right there and this area right around here? You can see it's a little bit different. You can see that spike up there, here, and this area on total is stronger than it was on Bitcoin. Look for these divergences. They're very important to understand. Now, what does it mean? If we get a down wave, we've got a lot of crypto-wide market support just kind of midway in this area. And that midway point will definitely just translate into that 45.20 mark on Ethereum. What we're doing here is called cross-structural analysis, and it's a very important part of TA. When you understand that the structure of one chart impacts the structure of another chart and the chart that you're putting money into. Say you wanted to buy Ethereum. What this is telling me, if the market does a natural retracement around to this level, there's a lot of structural support inside the market. We would expect a retracement to 45.20 and a resumption up. There's a lot more to it. We have to keep our eyes on the futures as well. This is why you want to get really fast at doing the cheat sheet. You can do the cheat sheet when you've been through the Profiting Advanced Masterclass. You can do it in under 5 minutes. I'd like to thank the very generous community members who reached out and bought me a coffee on buymeacoffee.com. For Nick and Antonio and Brett, thank you so much, guys. You are awesome. And I recently put out the lyrics to the markets game. Now you can just look in here. It's completely open. So you can just go in there. You can see I'm not logged in. And this will give you so much insight into what the song means, how you can use it. And of course, you've got all of the lyrics here. In fact, let's go out with a different way. Let's put that song in right now so you can hear it. And you can also, if you like, you can play it, of course, on YouTube. That's the link in there. But let's just run that one, and I hope you love it. It will really help you with your mindset.
Yeah. The most important thing is your mindset. Control emotions to see success. If fear or greed is what you feel, your account will bleed. It's all too real. The market moves towards maximum pain. Loss comes from emotions that you entertain. Greed and fear, they cause the loss. If you're emotional, you'll pay the cost. The market reflects collective pain. Panic or greed, they're in the game. 90% fail, it's plain to see. But you can be part of the 10%, be free. Success comes from overcoming fear. The less emotional, the more you steer. Risk your capital, don't be afraid. Don't chase the profit, let it be made. Focus on losing the least. CTKS will give you peace. Markets cause emotional overload. That's the truth, it's the code. You won't win all the time, that's clear. But losses are lessons that bring you near. Control the downside, focus on the flow. Make more than you lose, that's how you grow. Don't fight the trend, let it go. Profit comes from knowing when to show. The market is not about being right. It's about keeping your focus tight. Certainty destroys profits fast, and uncertainty profits last. Success comes from overcoming fear. The less emotional, the more you steer. Risk your capital, don't be afraid. Don't chase the profit, let it be made. Focus on losing the least. CTKS will give you peace. Never buy and sell based on feelings. You control your response, that's the meaning. The market pulls from millions of thoughts, but the unemotional will take the lots. If you gamble, the house will win. Big returns from zero knowledge, that's sin. The market will teach you until you change. Certainty's a lie, let your strategy arrange. Stay humble, always learn. Arrogance will make your profits burn. Buy and sell with emotional control. Intercorrelation is the goal. Buying and selling's not a race. Compete with yourself, not the chase. Your gain is your lesson, your loss too. Money secondary, control is what you pursue. Success comes from overcoming fear. The less emotional, the more you steer. Risk your capital, don't be afraid. Don't chase the profit, let it be made. Focus on losing the least. CTKS will give you peace. You make most in a downtrend, you'll see. But it's patience that sets you free. The market's a device that takes from haste, but patience rewards with profits in place. Success comes from overcoming fear. The less emotional, the more you steer. Risk your capital, don't be afraid. Don't chase the profit, let it be made. Focus on losing the least. CTKS will give you peace.